following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 24th. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, and we've all got it inside us, when we make that shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, well, just simply let your fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question, of course, inside the Tiger's Den. Hey, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Let's Show. Right now, the Dow down 50 points, trading out of 26,159. S&P off 11, down 3.4%. The NASDAQ 100 off 66 points. That's nearly 1%. Russell down 0.8%, off 13. Semis are off 2.75%. That's 36 points to the downside. We've got it mean and red. Red? How could that possibly be in a bull market? If we take a look at spot volatility index, that's up nearly 8, almost 9%, up nearly a buck. Gold is up 17, silver's up 52 cents, light sweet crude up 45 pennies. Our first question comes in from Tom G, and Tom G wants to take a look at the TVIX. He says, no matter how much I hate it, he doesn't care. He's going to go ahead and trade it. And I'm going to give him the best information I possibly can. And there was a question with Bob in Spokane who wanted to take a look at VXX. So I think they're all kind of in the same realm. So let's go get two birds or two tigers with one call out here. Now, the question is, if we take TVIX is the inverse. No, it's not the inverse. It is going long volatility, if I'm not mistaken. Let me just make sure. I always get that. Let me just tell you here. It doesn't matter which side of the trade you want to be on. Let me tell you what I think you need to be paying attention to, what you want to be watching for today for any of you that are trading these volatility vehicles. Number one, and you know this drill, and I'm sorry to sound like a broken record, but I'm not really broken. I'm just telling you what it is that you want to pay attention to. You're going to pay attention to the one-day rate of change inside the spot volatility index. Right now, it's up at 9%. I do not know where it's going to be at 4 p.m. If it's up over 10% at 4 p.m., and you were playing the spot vol, or you were playing your volatility ETF to the upside, take the money and run. Doesn't mean it's going to turn, but you know the rules of the game. When you get one-day rates of change above 10%, you're just playing with fire out there, at least based on the past. Now, what happens if it is trading less than 10%? Well, then you've got a decision to make. Where's the next place that you're going to look? The place you're going to look is you're going to look at the ratio between the spot volatility index, whatever it's trading at, and its 3-month counterpart. And that is VXV. That is the bottom panel of my screen. As we speak right now, if the market were to close right here, right now, This is telling us the next bottom inside the market is in or near to be in. If you take a look at each of those green arrows on my screen, whenever the spot volatility index gets above its 3-month counterpart, you get a ratio of 1 or something above 1. And you can take a look at each of those times what it actually meant to the S&P 500 out there. That is how I would be trading those volatility vehicles that you are in. Those two things will probably make you and save you oodles of money. Now, Tom also wanted to take a look at the LABD out here. And LABD is the, let's see what it is. It's the bearer portion of the biotechs, I believe. Right? Is that what it is? So you're looking for a long, maybe you're long, I don't know. But the question was, what do I think? So I don't know. Let's go see. What do I think? If we take a look at the IBB out here, that's what we're going to use as a framework. What is it? What is it doing? So as we speak today, this chart here doesn't show Stevie's red line on this chart happens to be railroad tracks, happens to be those black dots that are on here. Didn't mean to confuse you, but it's the chart that I've got pulled up on my screen. It's got some other tools that I like to look at. But if we take a look at what the IBB just has done, it's completed basically a 1 to 2.618 A to B equals CD. And therefore, if you get a bearish reversal signal today, right now you've got a bearish engulfing, and you're in the LABD, I could understand. The problem is you don't really have a confirmation. If you're in it, then to win it, what you want to be watching for inside the IBB is what happens when it gets down to Stevie's red line. Stevie's red line right now is 113.38. You're at 115.38. That's really where it's going to release some information to you. And I don't know how that test is going to, what the result of that test is going to be. So now you've got to make a determination whether a $115 vehicle is worth a $2 gain at this stage of the game out here. Because there's really nothing longer-term bearish when I take a look at the IBB. But can I see a intraday trade? Yes. I just gave you what those parameters are. And also, what Tom wanted to take a look at. It's a threefer. He wanted to take a look at going short natural gas. So the only thing that I can do here, and I apologize, I've got the continuous contract. Every time I pull up the March contract, my charts are just basically screwed up. Can I say that on the air? So, but here's what, but in essence, this is representing what it is that we know about the natural gas contract. Now, yesterday was a wide range. Well, let me do this here. Let's do this. Let me come back to my TAS profiles. Let me go ahead and stick up the natural gas contract. Let's go do a little reading on the natural gas contract with regard to its TAS profiles. It should be right in front of me. Where is it? There we go. So let's take a look at this. You wanted to go short natural gas. And in order to do that, we need to see some breaks below some TAS market profiles. And we don't have that. I do on a 60-minute basis. If you're going to go ahead and play this as it's pulling back, then the levels I would be watching would be about 296 to 329. That is likely, right in that range, that is likely to maybe even $3. So there's three numbers. You're looking at either 329, you're looking at 307, or 296. The chart still looks pretty bullish there, Tomo. Maybe not at the moment, but longer term, yes. Steve Rhodes with TFNN. We'll go take a look at the indices or anything you want when we get back from this first break. Achievers rise above the rest, and when they see an opportunity, they take action. Massive action. Achievers capitalize on every resource in order to experience success at its absolute max. And on Wednesday, January 31st, from 5 to 6 p.m., I'll share with subscribers of Mastering Probability how to achieve even more success with the extraordinary tools that I use to call the markets. These tools predicted the Ebola 2015 stock market bottom, the December 2017 gold bottom, and why subscribers added to their mining positions this month as well. Learn the pattern that projects the Dow's next upside target of 30,740. Folks, great moments were born from great opportunity. So don't miss this opportunity to take advantage of my 30-day money-back guarantee for Mastering Probability. All the details are on the homepage of TFNN.com. Sign up today and reserve your spot for the ultimate subscriber event.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 90 points. S&P is down 13. Had a request to go take a look at the wheat contract out here. This is for Bob in Spokane, Washington out here. So let's go take a look at it. We're going to take a look at the equity futures contracts out here. And are you long, Bob? Tell me what it is you're looking for. I should have typed that in on my screen out there. But here's what it looks like the wheat futures contract is doing. Looks to me like it is on its way up to 437. This is the daily set of profiles out here. Now, we're going to say that with an asterisk. The reason we're going to go ahead and use an asterisk is because you've got a orange-colored bar, and oftentimes, not always, oftentimes when you see that orange-colored bar, there's a brand new profile that will be forming. So tomorrow, Bob, you may have a new profile with a new set of data. I don't know where that profile will have a top, center, and bottom. The current daily profile is a bullish structured box. It's bullish in its structure because the center line is closer to the bottom. Says that the bulls, buyers, should be able to explore the top of that box. That's at the 437 even Steven area. So that's what I would be looking for. Doesn't tell us whether it'll bust through there, just tells us that's the top of the box. If it does bust above that, well, then it's the weekly box, which is a bearish profiled structure. You can see we're trading, in essence, right at its center of point of control, the center of the box. That's where price is very comfortable out here. And you want it to get out of its comfort zone if you're looking for this to move higher. Go test the top of the daily. Bust above the top of the daily so that you can go ahead and get this up to the 446 level. That is the top of the weekly profile. Now, if wheat can take out that high, I'm referring to the high on the weekly basis, that bearish structured box, that would be very bullish. If you take a look at this wheat contract coming back in essence into the July 2017 timeframe, you have not seen a close. You've seen a test of the top of the box. You have not seen a close above it. So this, from a longer-term standpoint, what you're looking for out there is, in fact, for price to be able to get above 446.20. A new profile looks like it's on the way. and then we'll have a little bit more information for you come mañana. So thanks for asking about that. I see we have a question here from John in Sarasota. John wants to take a look at ticker symbol MRCY. And the question was thumbs up or thumbs down, basically. So let's go take a look at this equity. Here we have the daily, weekly, and monthly profiles. And if you're bullish or you want to be long, you like to see price trading above the tops of those boxes. In the case of the daily chart, you're trading down below the bottom. This is a bullish profile that today was taken out, right? Take a look at that box, right? Center line very clearly from a daily perspective, very close to the bottom at 48.42 versus 49.15 versus the $55 all the way up top. So now you're breaking through a key level of support. Let's go check out volumes out here, because the prior swing point was on December 12, 2017, 601,000 shares. You've done double gee. That means you have doubled the volume and then some. You're at 1.2 million shares. That says there's sellers around inside of Mercury Systems out there. We're not talking any Freddie Mercury out here. We're talking about a consolidation. Consolidation gives you and I a projected price target as to where this may be headed to. Because typically when you break a consolidation, in this case here it's doing it with volume, your move is equal to or greater than the consolidation area. So what we know out here is that where price is likely headed to is going to be all the way back into this swing point from August 2nd, 2017. Or maybe it's this high volume bar from June 23rd, 2017. That just happens to coincide. Don't you like that word, coincide? Happens to coincide with basically the bottom of the consolidation target out here in that 41-ish area. So my call on Mercury Systems, and it's really not my call. I'm just calling what I see and what the charts are saying to you. This is no soothsayer stuff out here. Hey, by the way, inside the weekly chart, you're now down below the bottom of its box as well. And that box was mucho grande strong, and it's busting through that. You don't see a center line here, do you? The reason is because the center line and the bottom are the exact same price point. And whenever I see that, I know that's supposed to be Superman strength support. Now, the week is not over, and anything can happen. And if this closes above 47.08, well then, you know what you know out here, John, in Sarasota? That really is strong support. And then just you're in this consolidation. I didn't say short it. I just said, if you're asking thumbs up or thumbs down, the thumbs are clearly pointed to the downside. Thanks for writing. Best of luck. Hopefully that information helps you. We had a request, I think, to go take a look at, what was it? Let me come back here. Was it anything else? Was there anything else? I don't have a, no, looks like we're free. Looks like we're free to roam around these charts out here. Hey, don't forget, folks, you too can write in, steve@tfnn.com. Let those fingers do the walking. Tell me what you want to take a look at. What do we want to look at out here? Let's go start with the equity futures contracts. Let's go take a look at the NQ, arguably having a, giving back some of its gains out here. Is there anything bearish about this? The candlestick? Yeah, got a key reversal session out here. And look, we can draw A to B equals CD patterns all over the place inside the NQ. But not until, did I say not until? I mean, not until you see price close below 68.71. Does this mean a whole heck of a lot of beans out here? So that is item number one. That's a daily chart out here. And what you want to be paying attention to as price gets down there, you don't want to say, well, that was a daily chart. So, Steve-O, what's going on the daily chart with regard to its TAS profiles? How's this for bullishness with this little bit of a sell-off we've got? 65 issues above the top of the box, 14 below. Yeah. Be careful. You've seen this rodeo several times before. Why is today any different? Look, you've got to see this break below support. Not break below it, close below it. And we don't care if it breaks. It does a little break dancing. What you care about is where does it close. And the key here is going to be Stevie's red line. Right now, that's priced at the 68.71 area. If we take a look at the S&P, we're going to see the same setup, I believe, out here on most, if not all. Well, I can't say all, because we'll get to a couple that say, let's get to it right now. Let's go right to it. Let's go take a look at the Dow. Has had a big move to the upside and a big move to the downside. And what is the Dow doing today? What's it doing right now as we speak? It's testing Stevie's red line. It's right around 26,124. We're trading at 26,124. It's come back to support. That's all it's done. Now, if it closes below 26,124, well, then that could be sayonara, baby. And with regard to sayonara, baby, what are we going to go take a look at? I know what I'm going to go look at. I'm going to look at the daily set of profiles. And what we can see we've got here right now is prices testing the top of the box. So this is very cool for those of you that are paying attention to the Dow, because here's what we know. What we know is prices trading right on Stevie's red line. It's trading on Johnny's red line. That's John Logan from Taz Market Profiles. That level, by the way, is 26,149. So it's a tad below it. And support, the ultimate support inside of the Dow Equity Futures contract, that'd be 25,685. These are the levels you want to be watching. Steve Rhodes with TFNN. Great.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 51 right now. S&P is down 7. I got an email here. Jim was letting his fingers do the walking. It was interesting. He said, Steve-O, where do you get all that energy? That was his question. I like that. I hope you're referring to positive energy out there. Look, I live by a couple of different rules. The one that I do live by for sure is very simple. The way you do anything is the way you do everything. You think about it. You can apply that to yourself. You can apply that to those people that work with you, for you. You know, your children, your spouse, or whoever. The way you do anything is the way you do everything. It's always a great way to take somebody used to take prospective employees. You know this story, right? Take them out on the golf course and just watch what they do. And after that round of golf, you knew whether you should hire or fire, so to speak, that person, right? So I put this type of energy into everything that I do out there. So it's just, you don't want me to do anything different than that, do you? Anyways, let's go put that energy into a square peg out here. SQ is the ticker symbol. And we had a request to go take a look at that. That was from SNP. And SNP, I don't know, looking long. You're long looking to see at what price should you run away. Well, so if we take a look at Square, first of all, it's only been trading since the 2015 timeframe, and I do not have a monthly profile for you there. All that we know at this stage is the high. It has a high volume monthly high. And that price point out here is $49.56. And the first thing that says to you and I is that price will eventually go ahead and test that. Doesn't tell us when, but you have a high volume high. You like to see that. Now, that happened to occur in the same month as November in 2012. And part of that high, if you will, which you will, was a downdraft where this started taking off to the downside. The week of November 27, 2017, 249 million shares. You're trading inside that candle. You're trading above the top of the box. It's kind of like buyers and sellers, maybe they just don't know what to do at this price level, right? Because you got sellers, you got people who want to buy, like you're long out here. When should you run? I don't see a run signal as we speak just yet. Just simply a bit of I don't know, what's the word? Confusion. I was even confused to find which word it is that we should talk about. Then we go back down to the daily. In the daily, you can see that gap away, November 27th. That says 47.40 is really your target, your resistance target out here. And that's where the pedal's going to hit the metal. Because if price can go close above 47.40, then you have a change in polarity. That's why gaps are your friends. They're not your foe. They're always your friend. You know right now where there's going to be some resistance. You've been moving sideways over the last 3 trading sessions out here. But the truth is that the B point of an A to B equals CD to the upside, that was January 11th, had 21 million shares, and it was passed 3 days ago with 27 million shares. For all intents and purposes, where'd that come from, by the way? For all intents and purposes, this is an A to B equals CD to the upside. Confirmed. That takes you right to the 47.40 out here. So you have to make the decision, and I don't know what's going to happen once it gets there. You've got to make that reward-risk decision from basically where you're at, what your intention was when you got into this, if this was the long-term holding, because all those things will factor in. But it does look like 47.40 is probably where you will be headed to. We had another request to go take a look at the U.S. dollar index. Yeah, and you've got gold up at $20, and the U.S. dollar index just getting thrashed and trashed out here. And the question was, and you're welcome, S&P, the question was, because that was from Ruby Tuesday, and Ruby said, you're looking for support. Was there anything else added? I don't see it. So let's go take a look at the U.S. dollar index. Let's look at it a number of different ways out here, because I think that's the only fair thing to do. If we take a look at the current contract out here, you know and I know, that's a Dave Mason tune, right? And what we talked about yesterday was the importance of the hammer candle and the bullish engulfing, 90.04, 89.96. We looked at this with regard to the frame of reference for gold. And what we said was we really want to see those levels. I want to see those levels because we're long and strong gold in several positions out here, up, I don't know, just in our total portfolio. A portfolio of 10,000 is up like 9% or something. Yeah, so every $10,000 in that, in any event out here, that's neither here nor there. What we wanted in order to see gold run higher was for a close below the bottom of that We gave you the numbers yesterday, right? And where did it close? It closed below the levels we looked for. Yesterday's close was 89.91. We gave you 89.96. So that was a signal. It wasn't a signal that Mnuchin and Wilbur Ross and whoever else was out there talking about the dollar was going to say, we love a lower dollar out here. And whether that was the energy or not, that kind of energy, look, that kind of energy, the signal was given well before anyone said anything about that. So what do we have now? Look, in A to B equals CD land out here, Ruby. You know, you've exceeded the 1 to 1.618. You can keep going further. You can keep stretching. You can go down to the 1 to 2 level. That's 88.56. Ordinarily, you get to a 1 to 2. A to B equals CD. You start to see something else, but not always. You want to make sure you know where Stevie's red line is at. In this case here, I don't have that on this chart. You can make a 1 to 2.618. When you start getting into stuff like this, you've really got to go. You don't have to, but I suggest that you go take a look at the longer-term chart out here. Now, in order for me to do that, we've got to break away from the March contract, and we've got to go to the continuous. So we're going to do that, and now we're going to go ahead and switch and take a look at a weekly time frame. So what does a weekly chart communicate to you and I? Is there a larger A to B equals CD to the downside? And the answer is absolutely. And we take a look at that A to B equals CD to the downside. That price target is 82.24. So we're beyond the daily chart out here. We've now tried to get a better picture of where in the Sam Heck the U.S. dollar index is headed to, approximately. 82.24 is that target out here. You've busted through that B point. I'll assume you've done it with conviction out here. And now, there is a trend line. The trend is your friend, or it can be. And that's a trend line that takes you back into the bottom in 2011. And that may be where you find your first level of support. Your question was, where is it going to find support? So we've gone from the daily. I don't know where support is on the daily. You know, just price projections don't tell you whether that's support. We could take a look at Fibonacci expansions. Let's do that. But as long as we're on the weekly chart, let's just take a look at that Fibonacci expansion. That gets you right down, in essence, well, you're going to be at the 1.272 level, and that's at 88.63. Can that level be an area of support? Well, of course it can. Beyond that, then you're looking at getting down to about the 84.50 level out here. So if I put this on a longer-term time frame, what would that be? I don't know, quarterly. Let's put a quarterly chart out here. Let's go see what in the heck this is saying to you and I, if anything. Nothing different out here. What we know is this is good for gold. It appears to be good for gold. But, you know, there's a silver lining in that for the, I don't know, if you're bearish gold, small one. I don't know that I'd play it to the upside, but we'll go take a look at its charts. It's important to always look at both sides of the trade. Steve Rhodes, right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. Dow's off 19. S&P is down 4. Kevin writes in and says, Steve, what SPY closing price today would convince you there's more downside to come? The SPY. So if I just look at that, and I will say Kevo, yeah, I know it's Kevin, but you call me Steve. Well, I'm going to call you Kevo out there. Well, here's the answer, and then I'll follow that up. 281.20 as we speak right now. That's Stevie's red line. If you see a close below that, then I'd say, okay, maybe there's more downside out there. But the reality is you've got to take into consideration other factors. Now, look, you don't have to do anything, but I would take into consideration other factors. I'd be certainly looking at the 30-minute time frame. 60-minute time frame inside of the ES Mini. I'd be looking at the market breadth. When we came on the air, we were looking at market breadth on a 60-minute basis. You saw just a short-term squeeze. You saw price just dip below the red line, dip below the or above the green line is what I should say. And as we speak right now, 143, we're back up into bullish condition on a 60-minute time frame. So if market breadth is strong and price were to close below on the SPY, that level, I mean strong on just a 1 hour time frame, I wouldn't touch a short side. If the spot volatility index is up over 10%, I wouldn't touch a short side thinking, hey, I'm going to jump on this train right now. You're playing with I don't know, what do we, I don't want to say fire, right? You're playing with nuclear, material. So you've got to kind of put these components in. You can't just be one thing. This is not Billy Crystal and Curly, or was he Curly or the other guy? This is not just one thing that you're going to go ahead and make the decision on. I used to think that was the way. That was before I found out all these other things that you really need to plutonium. That's right. That you've got to take into consideration. Now you don't have to, but I tell you, I would. That is for darn tootin'. Sure, of course, we'd look at the 30-minute chart here for the ES, try to figure out what candlestick signals are going on, just what next happened. We look at profiles. Do you have to look at all those things? Yeah, I think you do. Look, you can see that you've had buyers try to step in at 2 different times. One just during the last half hour. You can see a nice little hammer candle out here. Prices headed up to the 28.41 level. Stevie's red line. He gets above that. You're not going to think about shorting. Now, this is going to be an important test on the 30-minute basis, Kev. And the reason that I say that is because the price oscillator right now is down at zero. And when it gets down to zero, very near zero, what you usually see is you see a test of Stevie's red line. So that's almost like a foregone conclusion. It's how that test resolves itself that will then tell you what takes place over the course of the next 30, 40, hour and a half. If it's a test and rejection, price gets up to the 28.41 level. It might be 42. I don't know what my red line is going to be at when it gets up there, rejects it, and starts trading lower. That's an indication that prices are going to resume lower. At least go test the low of the hammer candle from during the 130 session out there. If price breaks above it, you're back to a rising price oscillator above zero. You're back up to the highs. And this is a vertical market. It is relentless. Very few of us, well, we may have some experience trading it, but it's not like trading these. We basically have Zippo experience, in trying to trade these things. So the good news is we, with all our resources here, that's all of you guys and gals in the den. That's all of you in radio land, whether that's via satellite, via your phone, via whatever out there. We got to work together as a team. We cannot forget the ultimate outcome of where this market is headed to. The minimum outcome, we should say, for the Dow. There's not a stinking thing out here that says the Dow is not going to get to 30,740. Nothing out here. The S&P is headed to 3,000, and you're at 2837. So that's another almost 200 points, to the upside. Can a correction occur? It can. It doesn't seem to want to come from our normal signals. That's what scares the patootie out of me. It's because it's like I'd rather it come from our normal signals out here, but I just don't want to belabor because there's people in the queue. There's questions out here. In fact, one of those questions, so Kev, that's my answer. One of those questions came in from John, who said he's out of Mercy or MRCY, and he wants to know, what do we think of ULE? I don't know. Let's go take a look at ULE, see if we can figure that out here. You guys are trying to stump me with some of these ticker symbols. That's the ProShares Ultra Euro. What do we see? So then what we really have to do, John, is we've got to go take a look at the euro. It's going to be, if we take a look at the euro out here, trading at 124. This chart has got a 15-minute delay. My apology for that. But as we take a look at the euro, we've just simply got to come back here and put this on a weekly time frame. We don't have to, but I'm going to. What the euro is doing, what it looks like it's doing to me, what it looks like it's doing to you, is a giganto A to B equals CD pattern out here. That A to B equals CD pattern, you want to talk about, it's probably easy for a guy like Steve Mnuchin to say, yeah, we like a weak dollar. To a certain extent, did he have any choice? That was really like when you take a look at the euro, that is 56% or so of the this weekly time frame that we're looking at. You busted through a B point. What looks like with conviction out here. We don't need no stinking volume out here with regard to the euro. We just simply trade the patterns. And this has got an A to B equals CD to the upside of 133 and change out there. I would say that 133 is not where it's going to stop. 137. And look, folks, I'd go buy your tickets to Europe now. Don't wait for the summertime out here. There's not anything to suggest that the dollar is going to get stronger. Now, anything can happen. Talk about a perfect storm. Truly a perfect storm. I mean, can you believe this? You have the largest stimulus that we have ever seen. The largest stimulus that you and I have ever seen. It makes what they did in QE, it dwarfs the QE. QE was nada compared to the repatriation and the reduction in taxes that we've seen. You guys know that QEs, everybody talks about a $4 billion or $4 trillion balance sheet, right? That is hogwash. That's disgusting. That is not. Yes, their balance sheet is $4 trillion, but you've got to go take a look at the excess reserves, which is over $2 trillion. The majority of that money is just so-called printed, really just in accounts, so to speak, and it was just always sitting inside those banks. So basically, net was maybe about 1.8 trillion, give or take. And what's the stimulus worth with regard to lower taxes out there? And how about the money that's going to be repatriated back to the U.S., whether it's used for stuff in the U.S. or someplace else? It is gargantuan compared to what the Fed did. So let me ask you a question out there. If you knew now what QE 1, 2, 3, and 4 meant to a stock market or prices, in this case here, now we'll also probably take a look at commodities, how would you replay your game? How much time would you actually spend trying to short the marketplace versus instead looking for places to get in and add? Yeah, that's the question. Look, there's nothing more powerful than the question that you ask yourself. That is going to control your focus out here. Where's the euro headed to? Until proven otherwise, 133 to 137. Minutia or not, the dollar is going to get weak. Oh, yeah. And then how about a weaker dollar for the market? Oh, my gosh. Steve Roach with TFNN. That's the longer-term view.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back. Looks like Bill wants to know if MyGen, M-Y-G-N, can get back to its highs. On the monthly chart, he's looking at 44.90. Here's the weekly chart out here. Yeah, the little pitch tone. 3.1 million shares is the B point. That was October 9th, 2017. It was passed with 4 million shares. Bill, this is what MyGen is communicating to you. Yes, it'll get back to the highs, and it will exceed the highs, or very likely exceed the highs, head to 49.38, then 55.40 out there. I know you're looking at 44.90. If you're long this equity, I would say stay in it to win it. Now, the volume from a weekly standpoint is 7.1 million shares. It's only Wednesday. Looks like you're kind of coming into that swing point of November 9th with lighter volume. but you're already inside there, meaning you're above 39.32. So it's going to go test the high. But longer term, you've got a confirmed A to B equals CD to much higher prices. What you'd like to see as that high gets tested, 46.24, you'd like to see it do it with volume. You'd like to see it do it on a weekly basis too, just to have the conviction behind the move. So the answer to your question is absolutely. Let's go take a look at KJ. He says he's got 25 shares of Philip Morris. PM is the ticker symbol out here. And if it makes a 113.60 and closes above, I plan on adding the rest to it. Okay, so you're looking at 113 as a price point out here. If I just pull this back, let me see on the daily, what is this doing? So here's the deal with Philip Morris. Here's the piece of information we can use right now. The swing point it is dealing with for a small A to B equals CD was December 15th, 11 million shares. You're up over that today with light volume. You still want to see it close above that level being 110.27. I know you're talking about adding more shares to it at 113. You'd sure like to see Philip Morris, get its volume gear going. But right now, it wants higher price, so you're in it to win it. And I can see this getting back to the 119.87 area without too much difficulty. Folks, stay tuned. Your favorite polar bear. He is my favorite polar bear. That means he should be yours, too. That's David White. He's up next. Tom O'Brien, 3 to 5. I'll be back with you on Tasty, Terrific Thursday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.